What's up, everybody? Welcome back to the Next Win podcast with your host, Aunt Ma, co-host Justin Vaseur, and special guest, the lender, Mr. William Wynn. A lot of you guys have been asking this question: how do I buy a home? How do I get pre-approved? And this is why we have William on our podcast, because today, in this 1 hour episode, we'll be talking a lot about pre-approvals and all the different types of situations. And in this episode particularly, we'll be talking about what is the best situation you need to be in to get pre-approved? Because no one knows. They don't know anything about pre-approvals. What do they need from you?
Well, the first step is make sure you kind of have some kind of down payment, right? Some people.
What does that look like?
At least 3% for conventional and 3.5% for FHA, which is the first-time home buyer program.
What is
the purchase price?
What is the least amount of a 3% someone has put and the most that you've seen?
Lease is what? 14,000.
14,000. Yeah. Nice. So someone's bought a home with 14,000.
14,000 down, and you have to leave a little bit
for closing costs.
Okay, so like another. Let's say like $20,000. I think. I think we've done it with like 21. Someone with 21,000.
Yep.
Yeah, we've done that before. So you need down payment.
Oh, so your lowest has been with me.
Yes.
So me and William have gone to someone a house with $21,000 all in.
And actually we do a lot of I do a lot of loans with you. Like majority of my loans are with you.
Yeah.
And the one-offs are like friends that are real estate agents already and their clients. Yeah. Everything goes to him.
I'm gonna tell you guys this right now. I see a lot of comments about people. Ant doesn't know what he's doing. He's not a good real estate agent. He doesn't sell any homes. I don't show you guys everything.
Yeah.
Okay.
So
this is the lender, and he's telling you right now that we do very, very well.
We do very well. So people think, I'm going to go back to that. So I think we had a conversation about this. Some agents were like, I've been doing this for 20 years. The question everyone should ask is, how many transactions do you do every year? Because you can be an agent for 20 years and do one transaction a year.
Yeah.
And that means you only done 20 transactions. And it's 20 years, a lot of changes, right? But with us, like we can be maybe 2 to 3 to 4 transactions a month. Right.
Yep.
So within the 2 years, we already have more experience over someone else that's been in the industry a long time, because we have some crazy files that we didn't think was going to make it.
Every little change that happens in the market or in guidelines or in programs,
we have experienced
or the sellers changing their trends, we see it as they happen every single minute. We're minute by minute in this market.
It's like I would say, like compared to like sports, right? You want someone that's always practicing every day, right? Always practicing, or does it constantly. Not because they've been a player for like 20 years, but like how many teams you been playing on? You know what I mean? Like,
so, we got someone a home for 21,000.
Yep.
Okay. Now, what's the most someone has bought a home for with the biggest 3% down?
Biggest 3% down?
Yeah. Like how much house can you buy with 3%? What's that max? And then how much have you helped someone?
Well, 3% right now.
Like you can't buy a $2 million home with 3% down.
You can't?
You can.
What do you mean you can?
No, I'm asking, you can't?
You can't.
Oh.
Because
what the hell?
Because the loan amount, depending on how much the loan amount you need, like house prices, you need more than that, because the criteria changes, right? So you the more house you want to buy, the bigger the down payment. So like 3% is usually 3% is usually the average buyer, about 500 to like 600,000-700,000 maybe, because because you're putting so much down, the more house you buy, the loan's bigger, so that means your payment's a lot higher, right? And a majority of people that can put 3% down can't afford a huge house payment. Yeah. So usually 3% down, you want to stick around 500,000-600,000, because that's when those. From my experience, those buyers that's what they can afford monthly.
So what is the most someone has put on a down payment?
3% or most
for 3?
I think like 20. I can't remember the top of my head, because we do a lot of transactions. Maybe like 20-something thousand.
20-something thousand on a 3%. That's pretty good.
Most?
Yeah.
How
much house did that buy them?
I think I can't remember exactly. Maybe 600, 700, somewhere around there.
6 something, I think.
Yeah, right? Around there, 6 something. Yeah.
Okay.
With a good interest rate.
What if someone can afford the house payment, but they're just putting 3% down because they want
You
to
can still
keep as
do it.
much cash.
Yeah,
Yep.
you can still do it.
Happens all the time.
Oh,
Yeah.
okay.
Yeah.
It happens.
So I think what I was trying to get at was with 20 something thousand, people were able to buy 600K homes from us.
What about?
So that's awesome. So first thing, what you need to get pre-approved is you need that 20 something thousand in your bank account, as low as 14,000.
You need income. You need income too. So I would need your 2 most recent pay stubs and your W-2s for 2 years. Now, if you haven't been working for 2 years, I can still make that work depending on what you did before that. If you're going to school, you were in college and you graduated, I can still do it. I can explain that you're in getting your degree. Now you're getting paid. We did that for one of our clients.
Yeah.
She just finished college and she bought her first home within the year.
What are, I guess, out of all the clients that you've had, what occupations were the best to get pre-approved? If that makes sense. Did I ask that right?
Oh, what occupations? Yeah,
Yeah.
that's a
I
good
wouldn't say
question.
occupation. I would say as long
Income
as you get
level?
paid, as long as you get paid straight hourly or salary, that's the easiest
Okay.
because it's just bam, 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 just real quick calculations.
All right.
But when it goes down to like nurses, nurses because they have different pays depending if you work night shift, day shift, or overtime. Then it gets a little bit more
Really?
complicated. Yeah.
I would think nurses would be your best pre-approved client because they're the ones that get paid the best.
So the best in terms of income,
Yeah.
but more difficult to calculate
I
income
see.
because I have to look at all their paychecks. Basically, I would look for nurses and anyone with commissions pay. I need recent 2 years, recent two pay stubs.
Yeah.
Last 2 paychecks of the year for the last 2 years because that paycheck will show how much bonus you got, how much overtime you got, right? And then W-2s. If you have overtime, I need that overtime to be existent for 2 years for me to count overtime.
All right. So this is a lot of stuff that I'm not even following, and I'm sure you guys aren't either.
Yeah.
If you're listening to this or watching this, you can email William.
Your scenario, and I will.
He will email you what documents you need.
Yeah.
If you need it right now. What is your email?
It's William at the G team. So that's THEGIH team.com.
The G team.
Team.com.
GIH.
And then
Okay.
William. Easy.
So, we talked about person needs 20K, 14 to 20K. Then you also have to have a hourly job.
But the down payment, some programs we can get away with.
Okay.
Yeah.
So you also need to have a good job.
A solid
who
job.
else is the perfect person to get
Good credit.
Good credit.
Good-
What does good credit mean?
A good credit, I would say, it's a credit score over 700. And that doesn't mean if you have under 700 you can't get a loan. That doesn't mean that. It's just that it's more beneficial for you because the interest rate will be lower, right? The more riskier your credit score, the higher the interest rate. So the more money it will cost you,
Okay.
basically.
So the better your credit score, the better your rate will be.
Yes.
Let's say worst case scenario, I had the worst credit score in the world. How can I buy a home?
Depending,
What does my credit score have to be?
above 620 for conventional, and then above 5, depending on the program for FHA, and the government program, I think 580 something or 5.
Okay.
Yeah.
So with a 580 credit score, you can still buy a home.
Yes.
Can you buy a home without a credit score?
Great question.
Yes, good question. This is what I talk about experience. Not a lot of loan officers know this, and we've done it. Yes, you can. However, you need to have at least 2 monthly payments you've been doing for the past 12 months. Example would be Netflix.
Really?
Yeah. Netflix or car insurance.
Damn. So if you've been sharing your password or that guy that's been getting a password for a family member,
Yeah.
I'm sorry, man. This is why Netflix trying to help you out. Okay.
Yeah.
You guys got to pay for your subscriptions for reasons like this.
So basically, if you don't have a credit score, we will be non-traditional. So we just want to see you make a payment to something on a monthly basis for 12 months at least. So as long as you have that, you're golden. And then there's I don't remember the top of my head what the credit score that we use as, but it's not horrible. So it's doable.
How Netflix helps you buy a home.
Yeah. Anything monthly subscription.
Like a cell phone bill.
Cell phone bill, yes. As long as it has to be your name. Because the trick is a lot of these parents, or those kids,
yeah.
they're under their parents' name.
How about like can you waive all that if you have a cosigner, or you still need to have some proof?
If you want to be on the loan, then we need proof.
Got it.
Or else the cosigner is going to be the cosigner's house. Or loan.
Yeah.
You can be on title. That's a different story, but.
Got it. Okay. Yeah.
So that, what else we need? Yeah, that basically proof of income, proof of employment.
So let's say that someone doesn't have a good credit score. It's in the 400s. What do you recommend to get them up to get pre-approved?
I would still look at your credit report. A lot of clients that I'm able to pull credit from, and like we see the credit score, and then we have a program because we put a credit. We can sign into our credit reporting agency, and they'll tell us how to improve the credit. Like if you do this, your points will improve by this much, right? And then we
can 3 things that they can do to improve their credit.
Pay off their balances, or pay off a charge-off
like
account.
In full?
Yeah, in full. Pay
Not
off a
like month to month?
Not
to slowly raise it up?
Yeah, month to month. Or sometimes depending, you might be able to pay one credit card off.
Okay.
And that would jump your points. It'll tell you exactly.
Got it. Okay.
Yeah. Or like a pay off the charge-off that you had.
Yeah.
Or if some people don't know they had a charge-off, that we kind of write a letter and fight that. And just lower your balances, basically. Whatever, we'll work it out.
Okay. Does a personal loan versus a credit card matter? Like let's say you have $10K in a personal loan versus $10K in a credit card. Does that kind of...
It only matters it gets a little complicated when it goes to your credit score. It helps your credit score differently.
Yeah.
Right? What matters to me is how much you pay monthly on it.
Oh,
right?
okay.
Yeah. So basically, a lot of times now the rate's pretty high too.
The credit card might be cheaper than the
because
loan.
the minimum's like lowest $35 a month, right? Or if you have a big balance, maybe $200, $300, $400. Sometimes the loan will be more than that.
Mm-hmm.
So,
dude, the credit card interest rates are ridiculous. Right now.
Doesn't matter. You have good credit, you still be paying.
Oh yeah, my credit score is like 800, and right now, last month, I got 500 in interest charged.
Yeah, it's because the interest rate should be
$500.
Yeah, interest rate should be like 17%.
It's like 30% right now.
Oh yeah, see, it's crazy.
It's ridiculous.
Yeah. What are some things that don't matter? Like, do a lot of people come at you and you're like, oh, that doesn't matter?
Well, like people worried that I have too much debt, right? Because they're thinking, shoot, I have $100,000 worth of debt, I can't buy a home. But realistically, like I kind of mentioned, it's how much your minimum due is on that debt. That's how much.
So they don't calculate the whole 100K.
Yeah,
he calculates the monthly payments.
What your monthly payment is due. That's what we calculate. That's what we hit you with. We don't hit you like, 100,000 minus 100,000 off your loan amount. No.
So that's if their credit score is good, right? So like, for example, you were giving people advice to like pay off their credit cards and all that stuff if their credit card is crappy.
Credit score.
Credit score. But let's say someone has a 750 credit score, but then has $100,000 in debt. They don't have to go pay that off, right?
It could have been an option. So basically, sometimes it'll be you pay off like half, or like all scenarios is different.
So earlier we were talking about person with a horrible credit score.
Yeah.
Now you're asking a question about someone in terms of a debt to income ratio. So if you have too much debt and don't make enough money, then you got to pay off that debt to balance off that debt to income ratio, because you have to show that you make more money than spend more money. So
basically the magic, if you want to really know, like the magic FICO score, remember, this has to be FICO score. Remember that, because people come at me, my credit score is like 800. I'm like, and my question always to them is, where did you get that credit score from? Because from the free, from my bank. A lot of those free ones, if you check under the fine print, it says Vantage score. That is not the FICO score. It's Vantage score, credit score.
Wait, what is FICO credit score?
So FICO score is what 90% of lenders use, and that's the original.
And FICO is just like a company.
It's a company. It's a company that they made it back in like the 80s, I think. That rate your freaking credit worthiness.
So if you did like freecreditscore.com,
usually like Credit Karma uses Vantage score. A lot of the free ones from the bank are Vantage score, that is not your FICO score.
So when it's like you get those credit reports and it has 3, it's like Experian, another E something, and then another one like, and then you get the median. I thought that would be your FICO.
It's that is the FICO, but it has to be FICO. So sometimes they'll give you have to make sure it's FICO. Like if you see those on the online ones, they'll say this your credit score is this. It won't say FICO, and at the bottom will say Vantage score. So it's basically a little bit technical. Basically, FICO was a company. They've been in business a long time. They're the one that everyone uses to rate your credit worthiness. So the 3 credit bureaus, which is Experian, Equifax, and TransUnion.
That's what I was talking about.
They're like, we want a piece of this. So they made their own credit score, which is the Vantage score.
Oh.
And then the Vantage score takes into consideration like your rent, like a whole bunch of other different scores.
That is the one I use all the time because I get those emails.
Yeah, that is not your FICO score. So
how much does it deviate then?
Yeah.
For some people, by 100 points.
No way.
I know mine was
serious?
off by 100 points. Yeah.
What?
Yeah.
Wow.
Some people have better Vantage scores than FICO scores, and some people have better FICO score than Vantage scores.
So when I get these emails all the time saying you're at 800, it could be 700 or even 680.
Yeah, you just gotta look. You just gotta look at your FICO. I do know. I don't know the name banks, but I think Wells Fargo is FICO score. You just gotta say it'll say FICO.
Damn.
But if you get those credit reports and stuff, go to the 3 credit bureaus: Experian, TransUnion, or Equifax. They have a free service. You can get your score there, or you can pay for it. I pay for it because I get the monitoring. I recommend monitor your credit. No matter how old you are, start monitoring your credit. Make sure that's how you start building good credit. You kind of see what's on it that could be fraud, right? You never know, and you just fight it.
All right. So to sum it all up, the best person to get pre-approved for a home has money in the bank, has a job, and has no debt.
No debt.
Or
you can have some debt.
Okay.
But credit score, magic number 740. For the best, kind of a good rate.
Is there anything else for this perfect person?
That's it. No late payments.
Oh, there you go.
No late payments. No 30-day late payments.
On what though?
Anything.
It
can hurt you really bad.
Even a phone bill.
Even the phone bill. It'll report. And we're gonna question it.
Even like if you have like a Canva.com subscription account, or
they
like
can.
building
I
out
don't
your
think they can
website.
report anything that can report your credit report.
Oh, report your credit.
Yeah.
Okay.
Because I've seen a client drop like 60 points because they had one 30-day late on a credit card.
Wow.
And it was only like by 32 days late. And they reported it and it dropped 60 points.
Wow.
So be careful.
Okay.
There's
all right,
grace
guys.
period, but pay no more than 30.
So make sure you become the perfect person to get pre-approved. That's what you need. And if you are not this perfect person, don't worry, because William and I are so good that we can still get you pre-approved somehow, some way.
We did it.
Right?
We did it.
We do it for anybody.
Yeah.
Almost anybody.
Almost.
There's always that one or two that's just, it's really hard.
We haven't had one yet, but close.
All right, guys. So I hope you enjoyed this episode and you learned a lot about who's the best person to get pre-approved. And we'll see you guys next time on the Next Win Podcast.